Hello everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's MTPredictor video, I'd like to have another look at a Forex example on the Euro US dollar to do with multi-time frame analysis. But as usual, let's start with our risk disclaimer and remind you that all examples in these videos should be considered as hypothetical. No trades are actually taken, they're just shown for illustration and trading purposes only. Remind you there's a risk of loss in trading and investing. Put that another way, all professional traders know and understand, and more importantly accept, that losses can and will and do happen. The trick is not avoiding losses, the trick is trying to keep the losses small in relation to the profits. And lastly, remind you that all trade decisions are your own sole responsibility. In the last video we had a look at this TS1 Holy Grail sell on the 1 hour Euro US dollar chart, and we saw how this the trade was taken on the 1 hourly chart because it was in the direction of the large degree trend which we had on our 4 hourly chart, which was down. So today I want to have a look at a slightly shorter time frame Forex chart, again a bit later on the euro. You can see the euro carried on declining very nicely and then started to make a low in here and rally back up. So what I want to do is go back in time a little bit, use our training mode to come back to here somewhere and show you how you do analysis forward of the market on a time frame, and then once you've got a support or resistance on that time frame, how you go to the shorter time frame to then look for trade setups. In other words, multi-time frame analysis. One thing we teach at MTPredictor is we look at the last swing into a high or low. So here's the low, this is the last swing. You can see the pivots are connected. This is the last swing into the low. So if we go back to this pivot high, i.e. the pivot high that is the last swing into the major high or low, right mouse click, do decision point. This gives you an area in advance where a support or resistance is likely to come in, but we use the last swing into the high or low. This is an important area to look for support or resistance. So we had this area up here of where potential resistance was likely on the 1 hourly chart. Now remember, we're not just trading off this 1 hourly chart, we're using this for support or resistance, because in this example we're going to be looking at a 15-minute actual trade entry. So here is an area in advance where likely resistance is possible. So we follow the market, and then suddenly, can you see how it got up into this area here? So we're not looking at this DP sell because it wasn't quite at resistance. What we're looking at is the market came up into this area here where resistance was likely. Let's now have a look at the Elliott wave pattern going up into this high. So in this case we're using our Elliott wave tool, where we hover over the bar, we right mouse click and then select Elliott wave intermediate, and then we get our Elliott wave count. Now what was interesting about this was a 5-wave sequence, 1, 2, 3, 4, 5, with the high coming in right at the typical wave 5 WPT. But the interesting thing about this is it came in at the area of resistance that we had on our charts a long time in advance. So this is why I don't like picking the end of wave 5s unless they have other reasons why they're likely to end. But we're not going to look for a trade on this 1 hourly chart. We're going down to the shorter time frame chart in a minute. But what do we know about a completed 5-wave sequence? Well, after a 5-wave sequence is complete, there's 2 areas of potential support in this case, or 2 targets. The first is the DP off the prior wave 4. We go back to this area here, right mouse click, do DP. You see that gives you an area of support in this case, and can you see how it's in advance? If this area fails, in this case if the market goes through this area, then the entire prior 5-wave sequence is likely to be retraced. In other words, we go back right to the start of the sequence, which is here where I'm circling, right mouse click, place DP on, and this again is the next area of support. So this is what we know on the 1 hourly chart, is if this is a high, then the market is likely to go down to this level. If this level is breached, in other words the market carries on beyond that, then the next area of support is down here. So now let's just turn training mode off and see what happened. And as you can see, that's exactly what happened, with the euro going straight through this support zone and then carrying on down to the next major support zone, where it now looks like we're starting to get a rally of this level here. So the question being now is, were there any tradable opportunities to take advantage of this decline? So remember, we're just doing the analysis on this 1 hourly chart. We're not looking for trade entries on this hourly chart because this is what we call the larger degree. So now we go down to the shorter time frame, which is the 15-minute chart. Remember, we're looking for time frames between 3 and time frames different. So if you're looking for trades on a 15-minute chart, the large degree would be the hourly. So in this case, as we're doing the large degree analysis on the hourly, we'd move down to the 15-minute for trade entries. So remember, we're not looking as MTPredictor as a black box where we just take the signals with our MTP trend. We're not just doing this is a black box system. What we're looking for is logical trade entries based on our assumption on the hourly chart that this was our wave 5 high at our hourly resistance. You can see there it is. So what we're looking for is short trade entries that make sense after this hourly resistance has come in. And here we have a I'll zoom in a bit. Here we have a TS1 sell on a red MTP trend, so that was good. But can you see how this totally fitted in with our hourly or higher time frame analysis? In other words, this is the hourly wave 5 high. We're then looking for a decline potentially into this support level, and if this fails, then right the way down into this support level. So this TS1 sell here made perfect sense. Let's right mouse click over this first one because there were actually two there. I'm just going to take that off. There was a history triangle, then a TS1 sell. So the first trade setup was off this history triangle bar here. The only reason it's a history triangle is because we had a double top and this second bar took us in. Perhaps if I use training mode and jump back to this first setup, you can see it in a bit more detail. There it is. There's our setup. So we right mouse click, we then do analysis. Now, based on what I've said so far, we're assuming that if this is a wave 5 high on the hourly chart, then the next logical support target is down here at this hourly decision point. So would it make any sense to use this first 15-minute target as a trade exit? In other words, are we assuming the market's going to go just this small distance, or are we looking for the market to go down to this hourly support? Well, obviously we're looking for it to go down here, so we can grab and drag the risk reward and bring it down to, at the very least, our hourly support. And can you see how now that's increased our potential profit from 2.9R to 5.9, 6R. Let's turn training mode off. And as you can see, that's exactly what happened with the market declining very nicely into the first target there. So you could have either said, right, that's it, I'm quite happy with that, I'm now going to come out with a 5.9R profit and say thank you very much. Or if you wanted to, you could have looked at the hourly chart. Remember, we're doing the analysis on the hourly chart. We're not doing the analysis on the 15-minute chart. You've gone back to the hourly chart and looked at this and said, is the support coming in on these hourly bars? Well, at this DP support level, not one of those hourly bars had the high taken out. There was a blue buy bar there, but the high was not taken out. The market came back down and took the low out. So on the hourly chart, that gave confirmation that this DP support level was then going to fail, and we were likely to then continue down into this next low. So on your trading time frame, rather than deciding to come out at this level, you could have said, well, actually, I'd prefer to wait for this lower level here. If you had have done, that would have increased your profit to just over 12R, which would have been a very, very good trade indeed. But even if you hadn't, even if you'd come out at this first target, it would have been a nice 5.9R profit. But you see what we're doing is that we're actually taking our analysis of the higher time frame, in this case the hourly chart. We had this DP resistance on our chart in advance off this last swing into the low. So we saw the low coming in here. As the market started to rally, we had this resistance area on our chart. We waited to see what the hourly chart would do as it got up into that level. As it did, it then put in a wave 5 high. From that, we then had our two potential hourly targets. Once we got our area here, where a hourly high was likely to come in, we then went to the shorter time frame and then looked for trade setups that fell in that same direction or fitted in with that analysis. And you can see here, this was a lovely trade setup where we had the hourly high and then had a TS1 sell, and then looked to, rather than just trade it just off the initial targets that it shows on the 15-minute chart, we're basically setting the targets based on our hourly analysis. And this is the best way to use MTPredictor. It's not to just use it as a purely mechanical system where you just follow the automatic setups in conjunction with our MTP trend. The best way to do it is to do multi-time frame analysis like this, where you are on the higher time frame chart, and that is a combination of time frames between 3 and 5 time frames higher that you're looking to trade. So in this case, we're looking to trade on the 15-minute, so our analysis will be on the hourly. So if the higher time frame chart, the analysis fits together nicely, then you go to the shorter time frame to then look for your potential trade setup. Very quickly, I'll have a look at another example that's currently unfolding. This is on the Australian dollar Japanese yen, slightly longer time frame. Here our longer time frame analysis is on the daily chart, and you can see how the Australian Japanese yen came up and made a high at our DP resistance there. So that would be a nice area for a high to come in. We then go to a shorter time frame chart. In this case, on the hourly chart, if I go down to this, there is our Holy Grail sell. Remember, this was our daily resistance, so you're looking for the market to decline. This would be a good one to take because it's a sell setup after the higher time frame analysis. Again, we're not looking to come out at these minor targets. We're looking for a longer trade. The initial target for the Holy Grail trade setup would be the typical wave 3 WPT. As you can see, the market hasn't reached that yet, so it'll be interesting if it gets there. If we go back to the daily chart and put on the next target from the daily chart, that would be the DP from the last swing into the high. Remember, we use the last swing to the higher low, just as we said earlier in the video. So that would be off this pivot low here. So this would be a potential target. As you can see, the market hasn't even got there. So let's go back to the hourly chart. So here's our Holy Grail target, potential 8.3 hour profits. You can either look to come out there or down into the daily support zone where potentially 10-hour profit would be available. But as you can see, we're using exactly the same analysis we did on the euro, but this particular market is still in the, or this trade's still in the process of unfolding, so we can follow this and see how it unfolds over the next few days and weeks ahead. So hopefully a good example of how to do multi-time frame on analysis on some Forex charts and how you work on the higher time frame, then move down to the shorter time frame to get your trade entries, but how it falls in basically with the large degree analysis. And that's the best way to use MTPredictor. Again, not to just use MTPredictor as a black box system, just following the setups blindly. Do your analysis on the higher time frame chart, then look to find trade entries that fit in with that on the shorter time frames.